up, hit bulls? So I've been getting a lot of questions. I always get a lot of questions about what do I look for when I'm buying something, when I'm selling something. Also, how am I coming out in the negative and you're coming out up 100%? Like, what am I doing differently than you? I'm getting the alerts. It's not making sense to me. You might be in trouble with it. That's okay. So for example, I just alerted that I was selling my $7 AMC calls. Now, my $7 AMC calls are at 150% profit, okay, from when I alerted them yesterday or the day before. I want to take my profits. However, AMC is on a strong bullish run right here. So what I want to do is I don't want to FOMO out and hold it forever, right? Because that's what I would do if I didn't take profits. I'm just going to hold it and like, oh, what if it still goes up and it's coming down here and we're getting bearish? And I'm like, what if it still goes up? I'm just going to, I don't want to miss out on that opportunity, right? So essentially you end up holding due to fear, which you never want to do. You want to hold because it's logical to hold it. So we are human beings and we are emotional beings. It's okay to be emotional about this. You just have to control those emotions. So emotionally, what I'm saying as it's going up to 848 is, I want to sell, I want to sell, I want to sell, but what if it keeps going? What if it keeps going? And I see this reversal pattern here, you see? You see how those tops, those tails up top? See them bad babies and them wicks? And bad babies about to send us back down, maybe? So what I did was I sold my $7 calls. Now in the alerts, what I'm posting is I'm going to post sold $7 calls, entering $9 calls. And now what I mean by that is I'm going to sell. I had $27 calls at a 150% return. So I sold the $7 calls up here, right when it was reversing, right? Now I'm just going to watch it come back down. Just hang out and watch for a bit. Hang out and watch for a bit. Actually, that's a good come down. See how it's starting to get a tail right there? I might buy a couple more right here. Let's see. So we're waiting. Now I'm looking at the time and sales. I'm seeing some more green coming in. I'm seeing some more green coming in. Also, so I'm buying $9 calls, or maybe $8 calls. Now it's coming back down a bit, but I'm buying these for next week. So these expire March 5th. So I'm going a little further out with the expiration, but still I was selling the $7 calls for $175, and I'm buying the $8 calls or the $9 calls for right around 90 cents. So it's about half the price. And that's the key. So when I say I'm limiting risk, it doesn't mean that a $9 call is less risky than a $7 call. What I'm really limiting is the amount of money I'm risking. So by buying these AMC $9 March 5th calls, which I'm about to do right now, because you see that time in sales is getting a little greener than I want to be looking up against or looking back on. All right, so I sold the $7 calls at $8.50. Now I'm going to kick myself in the ass if this thing goes to $8.75, $8.80, $8.90, $9.10, goes back to 15 like it did a couple weeks ago, you know? Like, oh man, I sold it for $8.50. No, I'm not, because I took out my initial investment. I doubled my money on that because I've actually been doing the same thing since, I've been doing it since it was at $2 actually, but I've been doing it since it was at $6, right? This time around. So I got $6 calls when it was, you know, $6.20 or something like that. They were really cheap. It went up to 7 something. I started selling those off and buying 7s. And like I said, the reason I'm doing this is because I only allocate 1 to 5% of my entire profile per trade. So in order for me to take profits, be happy with those profits, and not FOMO over missing out on more upside to this thing, especially at a time like right now when the Fed's talking and who knows what they're going to do, but I don't want to miss out. So I'm going to buy $9 calls that don't expire for next week, because part of what I'm paying for them is the time, but I'm still paying half the price of what I sold the $7 calls for. So either way, I've made more than my initial investment back. On AMC right now, let's check really quick. On AMC, my profits are $25,000 this month. So in the past month, I've made $25,000 on AMC. I want to take some more profits and keep making it. And if I spend, so then I'm spending way less on the calls that I'm getting for the future. For those $9 calls, I'm spending way less on them. They're 80 cents right now, so I made my money, and I'm just spending a little bit. Really, it's almost like an insurance policy against FOMO. The same way that if I have $20,000 invested in CCIV, That thing's sitting at $65 freaking a couple days ago when I told you guys to sell it before it crashed down. But either way, I still had a bunch of puts at $40 just in case. I call those insurance puts. This is a FOMO insurance, okay? So when you're buying more calls, a little bit more out of the money that are cheaper, and you're selling the calls that have been blown through in the money right around a reversal. And so this is why, though, you may see the alert. Maybe you missed the $6, $7 alert from last week or earlier this week, right? And so you see me selling the $7 calls. You're like, oh man, I missed that one. But it's like, what? You see me buying the $9 calls. And you're like, oh, well, I missed the $7 calls. I better jump on the 9. But you're missing the logic behind it. You're missing the fact that the reason I'm buying the 9s, and I'll post it, but it might not make sense in the alerts. So the reason I'm buying those is because of FOMO insurance. It's not because I think this boy's going to keep going up that fast. Now, this is a heavily shorted stock with a reversal in place with the market, with the reopening trade being circulated back into, and some good news and earnings coming up on Friday. So it really has some potential I don't want to miss out on, right? But it also has the potential to go right back down to 750 right now. And at which point you're going to be mad if you bought those $9 calls right now. So what I would recommend doing is if you missed the initial play that made a bunch of money, maybe get a call. It depends on your budget. It depends on your risk tolerance. Like, the $9 March 5th calls are like 60 cents right now. So 60 bucks. If you care about losing 60 bucks, don't buy them. If you could give a fuck less about 60 bucks like me, buy them, you know? And you got to be able to develop your own risk tolerance. And that's why I put together a whole course for you guys about this stuff and how to do it and worksheets and everything to ensure your success and to make sure that you crush this. So that's when I say selling these cheaper calls to buy these higher calls to avoid FOMO or whatever, or FOMO insurance, we'll call it. That's what I mean. When I say I'm buying puts, so I could have held, let's just say I held the $7 calls. I'll hold the $7 calls and I buy 850 puts. Now I have the right to sell 100 shares for $8.50. So if it does go back down to 750, I'm going to make more off of those calls and still have the $7 calls that are still worth 50 cents. So they're still worth something. So I'm still keeping my money with these insurance policies. And this is how you hedge your risk and you don't get eaten alive and lose all your shit, right? Because people who aren't following my advice are trying to follow bits and pieces of my advice and they're getting fucked. And I don't like to see that, but you got to own that shit because that's on you because I told you not to do it. But it's FOMO. You're just afraid of missing out. It's just emotional. It's emotional trash, man. It's just being an emotional little pussy about the market instead of thinking logically about it. So think logically. Don't be emotional. Don't do exactly what I do just as I do it because you might have missed the reason I'm doing it. You know what I'm saying? You might have missed all the money that was already made off this play. And that's why I don't care if I lose $100 on this play because I made 25,000. You know, I got 10 of those calls. So I don't care if I lose $900 though because I made 25,000 off this play. What's $900? Right? I lose more by holding it too long and letting it all go back to zero. So I'm going to take my profits. I'm going to buy a little bit farther out the money so I don't get FOMO. And I'm going to keep bubbling off this. All right? I hope this video helps you guys understand so that you don't get eaten alive out there and so that you don't make the same mistakes that I keep hearing a lot of rookies making out there. And I feel bad. I'm here to help. So hit me up if you have any questions. I'm happy to help. Peace.